Recipes for technical trading success in Cook's Kitchen.
Are there any lessons for traders and investors in the Bitcoin crash? Well, of course there are. And I'm not just doing this with hindsight. There are some principles here that go back to Nassim Taleb's book, Fooled by Randomness, and some smart people who probably called the top in Bitcoin back in March. So here's the chart today. Overnight crash lows. What do we get down to here? 30,000 on the nose. That's what that's what Coinbase is showing. Coinbase is showing 30,000 on the nose for the overnight lows. Just incredible. And we bounced to 39,500 here Wednesday at 1:30 Eastern. Pretty exciting stuff. So let me show you a guy who was trying to pick a top in Bitcoin, and he's not a Bitcoiner necessarily, and that would be the anchor at TD Ameritrade, Oliver Rennick. Guy he's got an electrical engineering degree from Cornell, but most of his experience is in markets. So he's pretty analytical, and he also likes to tell a good story, but he's also very cognizant of the narratives out there. And so he was looking at all the narratives about Bitcoin. Here's what he wrote April 13th, and I think this is worth reading. He said, in October last year, I described the setup for Bitcoin as the most bullish I'd ever seen. Now, I don't remember exactly. We'll look back at the chart, but that consolidation between 9,000 and 10,000 for Bitcoin was super bullish. So let's see if that's where we were. And he was getting bullish on the coin. Just go back to that. So, yeah, actually, he was probably looking at it. We'll go back. We'll slide back here a little bit. So in October, yeah, that's where Oliver was looking at it. He was looking at, can this thing really bust above 10,000? And it looks like, so you look how long this consolidation took place. Really nice consolidation for Bitcoin. If you wanted to get back in, this is the one I was talking about. This 10,000 here was beautiful. You get the spike up to 12.4. I think this was on PayPal right here. I'm sorry, on Square announcing their stake in Bitcoin. Was a big, credibility, institutional finance sort of boost. And then Oliver was getting bullish here in October, on this move into 12,000. So back, I want to show you again his analysis. And he wasn't an investor. Tiny, right? But he was looking at it in terms of all risk classes, all asset classes. And for the record, I believe Bitcoin is a new asset class, and it's not just digital gold. Bitcoin is an order of magnitude better than physical gold in terms of transparency, and what you can accomplish with it. So we'll leave that for another time, but maybe I'll have some notes on that in the article version. Okay, so back to Oliver Rennick's tweet here. In October last year, I described the setup for Bitcoin as the most bullish I had ever seen. And when it finally broke past 20,000, I described in detail why I was a bigger buyer, or why I was a buyer at new highs. He says, this is in April, this time I'm not on board, and here's why. And you can find all of his pieces on his LinkedIn blog. So here was a thing he did March 25th. Bitcoin looks ready to break. And if it does, the whole market's going with it. Okay, so he was trying to call the top here, or the breakdown here, March 25th, this is what he said: Bitcoin looks like it's ready to break. Well, we got one more push. I'm not sure if there were any Elon tweets in there, but now if you had asked me, I would have said, I don't know which way Bitcoin is going. I don't know if the next tick is 40,000 or 80,000 for Bitcoin. I really had no opinion, just because it's kind of in a super bubble, and those things can keep going. The other piece, the more detailed piece that OJ Renick wrote in April. Oh, LinkedIn's going to take a while to load here. Isn't that great? Well, we'll come back to that. So let's talk about a big bull who a lot of people follow, and whether they should or shouldn't. Michael Saylor, CEO of MicroStrategy. So on May 13th, when Bitcoin was coming off of 65,000, he dives in. He bought 271 Bitcoins for $15 million in cash at an average price of just over 55,000, bringing his grand total hodl to just under 92,000, where he spent 2.24 billion at an average. His new average now 24,403. Here's what Michael is an example of. Okay, first of all, he's putting the cash balances of his software consulting company in Bitcoin. Now that adds some validation, but he's also I don't want to call him a zealot, but he's he has extreme views, right? This is a guy who probably firmly believes Bitcoin's going to 500,000 in the next 5 years. So that's why he's willing to take this risk. And if you're an investor with him, either in Bitcoin or his company, now you're experiencing the volatility. By the way, so here's his Twitter page. Michael's no dummy either. Aerospace, studied at MIT. And he's got 950,000 followers on Twitter. So he's got a bit of an army there following him. So let's look at what's happened to MicroStrategy during the run-up in Bitcoin to 65,000 and during the crash. Whoa, there goes MicroStrategy. I assume that a lot of this, the blow-off from 800 to 1,300 involved a fair amount of short covering. Probably smart guys who thought, well, we're just going to short MicroStrategy because this Bitcoin balance sheet thing isn't going to work out. So some shorts got smoked there. But, now here's the stock back to 450. Where did it go to overnight? Got down to 411 here on Wednesday morning. So basically back to where it was to start the year. So that's the volatility if you bet with him. Now, the point I want to make about Mr. Michael Saylor is that bright guy probably does see the future with laser eyes, but the average person cannot invest or trade like this because markets have wild randomness. You can believe in the fundamentals of Bitcoin. You can trade the technicals of Bitcoin. You can trade the randomness and the human behavior aspects, but you still have to trade your own position, and you cannot fall in love with the idea of Bitcoin changing the world and be buying it at 55,000 just because he is, only to watch it. And by the way, you should know that. So I believe Tuesday, May 18th. He bought another 200 some coins at an average price of like 43,000 to bring his total well over 92,000 coins. And it probably raised his average a little bit. And so if his average, crept up above 25,000, we got awfully close to his average price overnight at 30,000. And I haven't seen a new tweet from him today, but I hope he was buying down there. I hope if that's his level of commitment, because Tuesday the 18th, that purchase was $10 million. All right, so to him, what's 10 million between yourself and your dreams? It's probably nothing to him. By the way, my MicroStrategy only has a market cap of about $4.5 billion right now. All right, so let's see if this my article for OJ Renick loaded. So this is where OJ is taking on the narratives of the big believers. So I talk about the Fab Five in crypto, and there's other influential crypto guys, but the Fab Five to me are Novogratz, the former hedge fund manager, who was going to start a new fund, crypto fund, in like 2017, and then didn't after that crash, 2018. Then the Winklevoss twins, then Yusko, he's got a crypto fund, and then maybe Pompliano. But look at the headline quote here or the narrative that OJ is trying to address is that they all have the same groupthink that Bitcoin is gold 2.0, digital version of gold, perfect store of value, and that it will fight inflation. So, which is kind of a silly narrative if you see it as a new asset class that is completely different than physical gold or bonds or stocks. If you're just gonna be trading it based on inflation, because as Peter Schiff pointed out, who is a gold bug, he sort of trolled Michael Saylor. Yeah, I think he trolled Saylor the other day, saying, "Boy, if you're trying to fight 2% inflation a year with Bitcoin, you just lost 34%," and that was yesterday, before the crash down to 30,000. So I'm sure that Peter Schiff is banging the drum even more. His point was, hey, if you just lost 34% trying to hedge 2% inflation, you got 17 years to make up for that. So, I hope that the smartest guys in the room don't see Bitcoin merely as an inflation hedge, and they see it as a completely new digital asset class that will allow certain types of finance that the world has never seen, and it's already doing that. But you sort of have to believe it's going to keep doing that and keep evolving its ecosystem for the next few decades. So my whole point with this is that if you're a trader and investor, you still have to you can't throw all your beliefs into the idea of some perfect magical asset class. It can't take on a religious zeal, because then you're ignoring the reality of how markets actually work. You can love companies, whether it's Nvidia or Square or Shopify, companies I happen to love, but they can all go into bubbles too. So why can't Bitcoin? There's nothing perfect about Bitcoin, but that's what people get attracted to. They get it, just like in politics, they get attracted to the idea of something being pure and perfect. And when you base all your fundamentals around that and ignore the possibility of bubbles, then people get hurt. So anybody following Michael Saylor at 55,000 or at even 43,000 probably got a rude awakening. All right, what else do we want to look at here? I wanted to show you, and like, we can leave Elon out of it. I mean, let's just look at the chart again. It almost doesn't matter what Elon says, because if you think about it, you can say, would Bitcoin have gone to 65,000 without Elon? It probably very well could have. And it could have crashed just as easily too. So it's not just about what Elon tweets or whether he flip-flops or whatever. This is a market just like any other market, a stock market, a bond market, commodities. I grew up in the commodities markets on the floor of the Chicago Mercantile Exchange in the 90s and watched the wild swings in the meats, in the grains, in the currencies for that matter. So the Deutschmark and the Japanese yen. So it's still just a market. So they say it's not digital gold. It's what's the biggest critique of Bitcoin? That it's that it's just another commodity, maybe. I don't know. Let me show you, and to show you my ignorance here, I don't even know what a Bitcoin fork is, but I do know what Hume's fork is. And so I want to use Hume's fork to show traders and investors a way they need to think and put markets in perspective. So Hume's fork was the basic idea that, do we want to derive knowledge only from what we can touch and see and experience? In other words, the the beginning foundations of science, empiricism. What can we measure? What can we see? What can we test? Versus the other side of the fork, analytic statements. So here's if you just Google Hume's fork, you'll find some great diagrams. So here's one. Here's another one. Hume on the left here. I believe this is Kant. And so you can also think of the abstract world, the analytic thought, as one of mathematical models. The point here is that if the Bitcoin priesthood gets so analytical and or religious about their ideas, and they forget empirically how bubbles happen because of human behavior, then they're going to end up getting a lot of people hurt. So markets still operate on human behavior, which has wild swings, wild randomness, and bubbles. And we just saw one pop. All right, be safe out there. We'll talk to you next week.